Hey, Tony Abate here with Ross Mortgage and the Mortgage Insider, our mortgage pre-approval series. Today we're going to talk about the importance of assets, or the money that is going into the transaction. Why does a lender need to know where my down payment is coming from? Is that really any of their business? All right, so let's dive in. So the answer to that question is, yeah, the lender is going to have to make it their business about where your money for your down payment is coming from for the transaction. To use the cliche phrase, that's your skin in the game. That's part of the security to the loan, to know that your portion that's going into your home purchase contributes to the overall security of the transaction. That's why loans with a large down payment sometimes go through the system a little easier, maybe, than somebody who's putting down the absolute minimum. So the assets going into the transaction are a very important part of the equation, especially for first-time home buyers. That might be overlooked. Very often the focus is, what's my credit score looks like? Am I making enough income to qualify for the mortgage? But the assets are a really, really important part. And in fact, that's usually a big stumbling block for many first-time home buyers, because it's hard to accumulate savings. It just is. Things are expensive these days, for sure. So for starters, when you're getting a mortgage pre-approval, what do you have to do to document your assets so that you can get pre-approved? Well, coming right out of the gate, be prepared to provide 2 months of bank statements to the lender, okay? And make sure you provide all pages. Look at the bottom right of that statement. If it says page 1 of 5, send all 5 pages, even if that last page is blank or if it has something meaningless on it. If you don't send it, the lender is going to turn around and ask you for it, so you might as well send it right from the get-go. So the goal is, with a mortgage pre-approval, it's not just establishing how much of a mortgage your income will support, but are there enough assets to complete the transaction? It's just as important. A person may have a very, very high salary. They could qualify for $1 million mortgage, but if there's no money in the bank, they can't complete a real estate purchase. And so we have to look at all those puzzle pieces and evaluate that for a good, solid pre-approval. And you want to know too, so something a lender should do for you is to provide a hypothetical estimate on a home purchase before you even look at your first home. So if you're thinking that you're going to buy a home that is, say, $250,000, and you know that you want to put 10% down, well, have that lender put together an estimate for you so you can see all the numbers involved in the transaction. How much money you need out of pocket, not only to cover the down payment, but closing costs, real estate tax expenses, homeowners insurance policy. A good lender will prepare that estimate for you and walk you through it, so that when you do find the home that you're looking for, there's not sticker shock relative to any of the numbers. So we talked about providing 2 months of bank statements, checking and savings statements to a lender for pre-approval. But what if you don't have enough money to close on a transaction in your checking and savings account? Well, here's 8 potential sources of down payment monies that you might not have thought about that can help get you into a home sooner than later. So the first one we covered, it's the checking and savings account. We all know that. That's kind of the starting point. But then you might have access to a 401k loan. If you're contributing to a 401k with your employer, talk to the plan administrator for that 401k. You may have the ability to borrow against your 401k. Now, every plan is going to be a little different, so make sure you talk about this with your plan administrator at your employer. And if you're a financial planner, maybe talk to that individual as well. These are monies that are earmarked for retirement, so you want to make a decision carefully before borrowing against your 401k. But do notice I'm saying borrowing against your 401k, not withdrawing. Now, this is not tax advice. I'm just Tony, the loan guy. But if you borrow against a 401k, you're not typically looking at something that's going to trigger any tax expenses. Conversely, if you withdraw from the 401k or any retirement account that is a tax-deferred account, you not only have to pay tax on the withdrawal, but you'll probably have to pay a tax penalty if you're below retirement age. But keep in mind that if you are thinking, hey, I haven't saved up enough money for a down payment, so I might have to wait a couple of years, but I've got $50,000 in a 401k, you may be able to borrow against that, make a home purchase, and not have any tax implications because of that 401k loan. So think about that. Another source of down payment funds can be gift funds. A family member or even an employer can provide you with a gift that can go towards the down payment on your home purchase. And if you're buying a primary residence, there's no limitation. They can give you a small portion of the money that you need for closing. They can give you all the money that you need for closing, or anywhere in between. They just have to sign a gift letter that says, this is a gift. And it's as simple as that. This is a very, very common way for folks to purchase a home, especially their first home. It'll get you into home ownership sooner than later. So give that some consideration. Give funds from a family member or even an employer if they have such a plan. Sale of an asset. If somebody has a car or a boat or a wave runner or something that they're thinking, hey, I had my fun with this, I'm going to sell it now and I'm going to use that money towards a home purchase, that is perfectly acceptable. Now, the thing is, you're going to have to document that you owned it. You got to document what the value is, and you have to document the sale itself, the transaction of money. So for things that are titled, such as a car or that wave runner, that's pretty easy. You're going to have title information. But if you're selling your collection of baseball cards or a guitar or something like that, it's going to be a little tougher to establish that you have ownership of that asset. So make sure you have a conversation with the loan officer if that's your thought process. But that can help contribute to your down payment if you have an asset that you might sell and use those funds towards the down payment. In many areas and for many home buyers, there are down payment assistance programs or home buyer grants that can be available. Now, these are going to vary depending on location, depending on the price of home that you're considering. You might have to be a first-time home buyer. There can be income limitations. There's typically a lot of guardrails around these types of programs. At Ross Mortgage, we work with pretty much all of the grant and down payment assistance programs that are out there in the market right now. But the other thing to know about these types of programs is some of them tend to come and go. If this is maybe a grant that's being set forth by the government, it might have just a fixed pool of money, and then when that money is used up, the grant is over. So let's talk about that and see what might be available in your situation. And again, it might get you into home ownership sooner than you were expecting. If you have dabbled in virtual currency and you have maybe a Bitcoin wallet or a Bitcoin account of some sort, you can actually use virtual currency to contribute to your home purchase, but it does have to be converted into U.S. currency and put into your bank account. And we have to document that that was your money in the first place. So it can get a little tricky depending on the documentation that may or may not be available, but virtual currency can be used to contribute towards your home purchase. If your employer offers any assistance programs as part of a benefit package, that might be worth asking or checking into to see if that's a source where you can obtain funds for a down payment. Some employers have it, some don't. We don't see it a lot, but it's worthwhile checking into. And then lastly, secured borrowed funds. So I'll go back to the second thing that we talked about, the borrowing against the 401k. That is a secured loan. Your 401k is the security for that loan that you're going to use for your home purchase. But if you have stocks that you can borrow against, if you have a car that's free and clear that you might take a loan against, as long as the borrowed money is secured, you can use that those monies as funds towards your home purchase. What you can't do is take a big advance on your credit card. That's an unsecured loan. You can't use a personal loan from the bank. Anything that is considered unsecured financing will not be acceptable as a source of down payment funds. So I hope you found this information helpful. Hopefully this gets you maybe a couple steps closer to the dream of home ownership. Remember, getting a mortgage does not have to be hard.